So the latest commitment of traders report out of the CFTC, in this case larger speculative traders, positioning is as of last Tuesday, and when it comes to the US dollar, in the FX market, it was an underperformer. So that worked in favor of those holding a heavy long bias in the euro, as well as a slight majority long bias in the pound at 53%. Now they continue to hold a heavy long bias in both yen, safe haven yen, and franc, anticipating risk-off moves. When it comes to commodity currencies, however, it didn't quite go in their favor, and that's because although the Canadian dollar weakened last week against most of the FX majors, partly due to a weaker energy underlying with oil prices plummeting, the fact of the matter is it did best the US dollar by the end of the week, USD CAD dropping, and that meant that those holding majority short bias, and in fact increasing that majority short bias in both CAD and AUD, were in for a little bit of a shock. And when it comes to the Australian dollar, it was the outperformer. Those fresh shorts that initiated clearly getting squeezed by the commodity currencies ascent. Now the big one, of course, is when it comes to oil, and that's because this was 2 days prior to the OPEC++ meeting on Thursday, and prior to that they reduced short positions, and at the same time they increased long positions, taking the bias up to an extreme long 79%. So clearly last week wasn't in their favor because they were hoping for some sort of deal. Didn't quite work. We'll see what this week has in store for them, but bottom line is they continue to hold extreme long bias. The bulk of those longs initiated well above current market price. And when it comes to precious metals, they were mostly right, and that's because gold, silver, platinum finished a week higher, only palladium finished lower, and even then you can see that in this case they actually reduced their long positions in the palladium further to a more moderate majority long 61%. Lastly, in indices, Dow had its best week last week in decades, and in this case they were holding a majority short bias. They did reduce it, but they continued to hold a majority short bias at around 60-61%, so it wasn't in their favor. S&P 500, they increased their majority short bias to 55%. NASDAQ, they did get it right. They're on the right side of the trade, but they have reduced that long bias to just 57%. Those fresh shorts that initiated obviously squeezed by the recent risk on, or I should say buy at the moment.